Let me turn my attention to the economic data that came out. But before I get to the jobs numbers that came out today, which everybody is talking about, I want to talk about the trade deficit numbers that came out yesterday that basically nobody is talking about other than me, right? We got the July trade deficit, and it was supposed to come out at 58.5 billion, which would have been worse than the 50.7 billion from the month of June. And first of all, that deficit was actually revised higher to 53.5 billion. So the June deficit was worse than what was originally reported. But the July deficit was even worse than that, and even a bigger miss over what the consensus was. The deficit came out at $63.6 billion, and that is the total deficit in goods and services. This is the biggest deficit, monthly trade deficit, that the U.S. has had since July of 2008. And that trade deficit was the worst trade deficit in U.S. history. And this is, I think, the second worst trade deficit in U.S. history. Now, that trade deficit that we had in July of 2008, that huge deficit happened just a little bit before the crash in 2008. Remember, even though the recession began in late 2007, nobody realized we were in a recession in the summer of '08. I mean, nobody realized it really until probably the early 2009 that we had begun a recession. But the stock market didn't crash until summer. And so when the stock market tanked and we had the financial crisis, that's really what stopped the trade deficits. That's what brought down the trade deficits, was the Great Recession. So while we had this big bubble that the Fed had inflated, Americans were spending all this money on imports and running up the deficit to a record level. Well, finally now the Fed has printed enough money so that now the deficits that we had just before the '08 financial crisis, we're back at that level again. And maybe that's another harbinger of another crash to come to bring this deficit back down, because if we don't get a crash, based on how much money the Fed is printing, the deficits are going to go even higher. And based on the fact that the dollar is falling, remember, as the dollar is falling, that exacerbates these deficits because it means we have to pay more for our imports and we get less for our exports, which drives the number bigger. We're going to need a severe recession, even more severe than the one we're in now, because technically, I mean, we're still in a recession and we've got this high a trade deficit, as high as the one that we had when we were still in the bubble. Now, interestingly enough, too, you had spokesmen for the Trump organization on CNBC discussing the trade deficit and pointing to the growing trade deficit as being a sign of an improving economy. Hey, this shows the economy is getting better because, look, we have this big surge in imports, and so this shows that the economy is strengthening. But, of course, when Donald Trump was a candidate for president, he said that big trade deficits were a sign of how weak the economy was, that we had decayed, that we were an industrial wasteland. Remember, Donald Trump's formula for making America great again was restoring our manufacturing and putting an end to our trade deficits. He kept saying we were losing on trade. We were losing on trade. Vote for me so we'll win on trade. Well, I voted for Trump. Trump won, and now we're losing bigger than ever. This trade deficit that we just got last month was worse than any monthly trade deficit that we had when Obama was president. So how are we winning? We're losing big time. We're big league or bigly, whatever the Trump expression is. Now, I know there are a lot of people that are saying, hey, Peter, you're not being fair because, there's COVID-19. Yeah, I know there's COVID-19. It is a global pandemic. It's not just in the United States. That's why it's a pandemic. So every country is dealing with the effects of COVID-19. So why should that cause the U.S. trade deficit to go up, right? When we've all got the same problem. See, what's driving this trade deficit is not COVID-19. It's the weakness of the U.S. economy. It's the structural problems in American industry that have persisted throughout the Trump presidency. Trump did nothing to address the underlying issues that were causing the large trade deficits that he promised to eliminate. And in fact, our response to COVID-19, all of this new money printing, is what is driving up these trade deficits, because people aren't going to work, and so they're not producing, but they're getting money. They're getting sent money from the government, and then they're taking that money and they're buying stuff that was imported that other people worked to produce. And so our trade deficit is going up as a result of the money supply going up. But this is all inflation, and this is going to change. This dynamic is going to change when the dollar tanks and the cost of all this stuff that we're importing goes through the roof, and it becomes so expensive that no Americans can afford it, or few Americans can afford it.